This video chart presentation of DYNIQ Inc. This is now a pink sheet listed stock. I believe it was a New York Stock Exchange stock. It filed a bankruptcy, and it's now trading under ticker DYNIQ. First and foremost, bankruptcy plays can be very risky, but they can also have some really nice rewards. A lot of times the upside to them, you'll see a real nice recovery in a bankruptcy stock. And in the case of DYNIQ, just fell off a cliff from over $3 over the course of a few months, all the way down to 30 cents. Did put together initially a nice bounce, more than a double. Now it's pulled back, holding a higher support level around 40 cents. Gapped through the 50-day moving average yesterday on a slight increase in volume, almost 600,000 shares traded, closed up over 7%. I want to keep this on radar, see if it's going to take on an upward push, because from these levels, there's some pretty nice percentage gains to meet some upper end resistance points. I see it, the MACD is trending back towards zero. Of course, key point for me is I want to see it break through zero, similar as it did right here. On that break, stock moved from around 40 cents up to 64 cents. It's a nice 50% gain. And that's why people call that the money line. It's a very bullish indication when the MACD can push through that. And right now, because it's so close to it, I think worth keeping on watch because it's showing a shift in trend in this chart. PPO is in a very similar position, kind of coming off an offset pinch. ADX is down very low. I always talk about when it gets near that area of 10 to look for a rotation and for some strength to be added to one direction or the other. Now, it doesn't tell you which way. You can see through here, down around 10, large increase, a lot of strength being added to the direction. In that case, straight downward. Point being, when it's registering at 10, the direction is very weak. Look for the stock to pick a direction and add some strength and move harder on it. Below 50 is what I call bear chart territory for the MFI. Now all three components pushing their way above 50. That tells me that people are starting to pay slightly higher prices to pick this stock up. Accumulation distribution finally looks like it's going to flatline a little bit. Of course, I want to see it curling up, show more accumulation, but at least looks like it's trying to slow its roll from all the selling pressure, and the buying and selling is evening itself out. And that's, of course, also reiterated by the Chaikin money flow, which is based upon the accumulation distribution, moving its way back towards zero. In the red says selling pressure is still dominant, but moving back towards zero shows that buying and selling pressure is somewhat equalizing. Per the definition of the CCI, break of 100 is officially the buy point. It would be a hold until it breaks back down through 100. Full stow, putting together an uptrend, moved above 50, says there's bullish momentum coming into this play. Tricks, it's another gauge of trend like the MACD, starting to uptrend a little bit, moving back towards zero. But much like the MACD, the break of zero is the key point to show bullishness. RSIs have pushed their way over top of 50. Again, that's what I always look for. All three components holding over top of 50 show bullish momentum. Break back down through 50, that's a negative sign. But right now it looks like momentum is trying to come in a little bit harder into this play. Regarding the candles, there's a very bottom support at 30 cents. But I'm looking more towards this area of 40 cents. Any pullbacks, that's what I'd want to see hold. If it can't hold 40, chance of it coming back down and testing that bottom is really strong. And that's just too far of a gap from where it is up around 49.50 cents a close. That's too big of a loss. I'd have my eyes set firmly on 40 cents to hold as a bottom support. Now on the resistance side of things, 53 cents is the first area that I'd be looking at. If it can push through that, it's going to meet a little bit more there at 60 with some top end resistance around 64. But I actually believe this momentum is going to stay strong. I'd look for an increase in volume. If it can take out this 53 cent mark, I think the odds are pretty good that it's going to go up here and challenge 64, which is about a 30% move from where it is closing at 50 cents. I think if I was zoomed in a little bit closer, you'd see it's probably 49.5. It doesn't look like it's quite at 50, but that's still a pretty nice upside to challenge that resistance point. Beyond that, it's definitely secondary. There's a little bit around 75. If it could push all the way up, I'd look for it to have a tough time at $1. That's a pure double from where it is. I never get that pie-eyed and think it's going to run up there. I try to stay very central focused. And right now, I want to see an increase in volume, and I want to see us react at 53. And if it can continue to push and challenge 60, 65. It's a nice looking chart. Bottom plays, bankruptcy plays certainly carry a high degree of risk, but that doesn't deter some people because the rewards can be great as well. Always remember to use tight stop losses and always keep an eye on the play. Those are the type of things that I'd be looking for in the DYNIQ chart, but as always, merely my interpretation. Thank you for watching and trade smart.